So Chardan was an innovator and pioneer on SPACs in the biotech space in particular. Chardan has a large healthcare practice focusing on private biotech companies. Over the years, we've met with many of them and have seen that there are some specific challenges to how biotech companies do go public. And a number of years ago, we recognized that SPACs could actually help ameliorate a number of these. And so we were a pioneer in bringing this concept to the biotech space. We were an underwriter of the first 5 transactions in the space, and we closed the first biotech-focused SPAC through our own sponsored SPAC called Chardan Healthcare Acquisition in late 2019. A biotech SPAC is unique in the sense that there are some real challenges to how venture-backed private biotech companies go public, in the sense that the diligence process is more intense than you would see in other industries. By having a SPAC that's already public, that has healthcare-focused investors looking for opportunities, allows these biotech companies to not have to do a crossover round, which can be dilutive before an IPO. And thus, by engaging with a SPAC that has dedicated healthcare specialists focusing in that space, it allows these venture-backed private companies to go public quicker, more efficiently, and at a better valuation, which is very interesting for the broader biotech community, which by and large is looking to consume large amounts of capital and get listed earlier in their journey than you would see in other industries.
In May of 2019, we underwrote the IPO of Health Sciences Acquisition Corp., which was sponsored by RTW. It was focused on biotech, specifically in gene therapy and immunotherapies. Within a few months, Health Sciences Acquisition Corp. Had identified some really interesting and viable targets, ultimately narrowing the focus on one target named Immunovant. Because Immunovant had a near-term need for cash that's somewhat unusual in business combinations, we assisted the group in structuring a bridge financing that closed approximately 1 month prior to the business combination itself, bringing an additional $35 million to what was already a $115 million capital pool from the IPO. The business combination resulted in approximately $140 million being made available to Immunovant through the close of the business combination in combination with the bridge financing. We structured the transaction to optimize the investor mix by eliminating any potential sellers and rotating in their place supportive investors. The result of that was a business combination fully supported by the market with no near-term selling pressure. And that has led to what is currently the best performing SPAC business combination, with a stock nearly $50 and a valuation approaching $5 billion from what was a $561 million enterprise value at business combination.